Guys, welcome back to another entry for Phoenician League Notes from the Frontier. I'm Joe Withrow, broadcasting from my solar shed way up in the mountains of Virginia, totally off the grid in the office up here. So the springtime rains are upon us here in the mountains, and I want to share a picture with you I snapped as I ventured off my property. I don't know, to me, this is just really, there's something magical about this. There's something neat about seeing the mist on a cool spring morning, crisp air up in the mountains. So yeah, I just wanted to share that with you. You know, life on the frontier, it's a simple life, but I treasure the aesthetics and the connection to nature, and it suits me. So getting back to the world of finance, let's continue our discussion on asset allocation today. So if you recall, we've been talking about how to build a bulletproof asset portfolio utilizing Harry Browne's old permanent portfolio concept with some modern tweaks. All right, so at the Phoenician League, we see a bulletproof portfolio as consisting of reserve assets, strategically warehoused cash, capital efficient stocks, cash flow investments, and alternative investments. So we've already done videos. We talked about reserve assets and how to strategically warehouse cash. So you can go back and we've got those all in the playlist here if you've missed those. But today we're going to dive into the world of capital efficient stocks. And we have to start with this. So I've been immersed in the world of investment research for over a decade now. I've read countless research reports and I've studied more investment and trading systems than I can remember. I've also had access to a wealth of expensive tools and data sets to conduct my own research within the financial markets. Okay, so this experience has cemented a fundamental principle in my head. Now, this is something I learned from Porter Stansberry over 10 years ago. There's no teaching, there's only learning. And I know that statement sounds a little odd when you first hear it. There's no teaching, there's only learning. We've come to realize that that's eternally true. And I believe it from experience. You see, when I began my journey as a young financial analyst, I thought the key to investment success lied in being clever. You know, I thought the name of the game was to constantly identify asymmetric opportunities in the stock market that could generate significant capital gains in short periods of time. In other words, I was always looking for the next hot stock. I wanted to find these little companies that nobody knew about yet. And my thinking was that the stock would explode higher once those companies had a breakthrough. But here's the thing, they're not guaranteed to have a breakthrough. you know, so that's not an investing mindset. It's a speculator's mindset. You know, and I think that mindset has been amplified recently by smartphone brokerages like Robinhood and Webull. And, you know, my observation is that most people who dabble in stocks do so with the speculator's mind. The problem there is that you're not going to bat 1,000% with your speculations. You know, you'll be lucky to hit, 50% with them, which makes that approach a coin flip at best. And to my way of thinking, you'll never build a bulletproof portfolio with coin flips. Dealing with this dynamic myself earlier in my career, I came to a key insight that now drives all of my investment decisions. Investing is about ownership. When we invest in something, we take ownership in it to some degree or another. Of course, that insight, it's not unique to me. That's something that Warren Buffett has harped on for decades in his annual letters. But there's no teaching, only learning. And it took me a little while to learn the importance of this concept. Investing is about ownership. If we understand this, it stands to reason that we should mostly invest in the absolute best businesses, ones that we would be happy to own for a long period of time. So when it comes to the market, that means focusing on world beating, capital efficient stocks. Okay? Capital efficiency refers to how effectively a company uses its financial resources to generate profits and free cash flow. The more capital efficient a company is, the more value it creates for every dollar invested. And I know that sounds embarrassingly obvious, but it's amazing to me how many investors ignore the principle of capital efficiency, although it is easy to understand why. The reality is that most capital efficient stocks are boring, well established businesses. They don't come with the exciting story and the low share price that animates Robinhood traders and in Reddit forums. Nobody's going to be excited if you put this in the Reddit forum. But instead, capital efficient stocks, they're businesses who create immense value in the marketplace, and they just constantly crank out free cash flow in the process. These are companies who execute quarter after quarter, year after year, regardless of economic conditions. So when we focus on capital efficient stocks, we don't have to worry about timing the market. Instead, we can confidently build up our positions over time. For example, I like to invest a little bit of money into my favorite companies every week, which is to say, I buy a few more shares in my favorite capital efficient stocks every single week. And doing this cuts through price volatility and it helps me build out my portfolio over time. It is a slow game at first, but then the magic of compounding starts to kick in. That's because capital efficient stocks pay strong dividends. And if we reinvest those dividends each quarter, our portfolio will grow faster and faster over time. So to me, the key is consistency and discipline. I know plenty of people who think that it's impossible to come out ahead in the stock market. They see it as gambling in a rigged casino. And I agree with them that it is if you're going into it with a speculator's mindset. But at the Phoenician League, we're not speculators. We're investors. And investing is about ownership. That's why we want to focus on the world's best capital efficient stocks. And remember, stocks comprise only one small part of a bulletproof asset portfolio. We aren't putting all our eggs in this one basket. As such, we don't have to worry when the market takes a hit, as it did earlier this month as I produced this in April 2025. Plus, we know that the capital efficient stocks we're investing in will be fine during periods of uncertainty. Indeed, our top positions in our portfolio, they moved higher, not lower this month. They went up in value even as the stock market went down. And this speaks to the final point I'd like to make with you today. And that is investing in capital efficient stocks, it's not about getting rich. It's not about trying to retire early or anything else of the sort. It's quite the opposite. What we're doing with this is we're building true financial security. And once we have that security in place, that's when we can dive into the world of cash flow investments and start generating extra monthly income for ourselves. Okay. And that's going to be the subject of our next entry.